Welcome, ladies and gentlemen. Start again. Welcome, ladies and gentlemen. Man, it's a very good day, isn't it? You know, there's a lot of things happening in the space right now. We've had some nice recovery across the board, but today's live stream, we're just going to break it all down and let you know what's going on. And this government shutdown story seems like it could be coming to an end. Of course, on Friday, we did see the markets make an aggressive reversal to the upside on the grounds that the Democrats were actually coming to the table with a potential agreement that would say that they would want the tax credits to be given for a year, a period of a year, so that they can get their thing doing and just get this government open. Now, Trump keeps saying that the Democrats have got the government shut, but ultimately he has to come to the table as well and say yay or nay with what the Democrats are looking for. Now, across the board, ladies and gentlemen, everything is starting to make a nice little bit of a climb to the upside. I'm seeing not much coming out in terms of news announcements. And more importantly, what you've got to understand is the market right now is trading sentiment. And you hear me say this all the time because we are. Firstly, we don't have any data from the Bureau of Labor and Statistics. So we don't know where we are with the labor market. We don't know where we are with CPI. And I'm seeing a lot of people that are like, oh, we're getting the CPI this week and, you know, just watch out for volatility. Listen, the government is shut. And they even told us last time when the CPI data was released, I think they released it last time just to give us a little bit of flavor in the sense that, you know, we want this data and the markets need to move. But they had stated that we may not be getting the actual inflation data this week. That's what they said last month. But now that the Democrats have come to the table and there's a potential trade-off between the Republicans and the Democrats, we might actually get that CPI data. So unless the US government is open, there will not be any bouts of data that are going to be released. Now, of course, this week, it's going to be interesting, guys, because we've got a bank holiday tomorrow to commemorate Veterans Day. So mad love to all my veterans and what have you. Hoorah and all of that. So even though I'm not from the States, thank you for your service, you know, to whoever it is you representing out there. But with that being said, let's get with the program, understand what we're dealing with. I'm going to break down a few things just to tell you where we are with, of course, currencies, you know, Forex, the futures markets, gold. What's going on with gold? I told you about gold. They consolidate, they prepare for the next hedge, and now we're going into it. So let's break it all down, gang. Mad love and respect to you all. Yes, you know what? My beard is looking rough, all right? I feel rough. But you know what? We do what we do. Let's get with the program, gang. So, headlines. What are we seeing? What's the retail trader actually getting up to in the morning and like, what's going on? So, when you see titles like bonds fall on push to end shutdown, it means what? How many of you would understand that when bonds fall, it means risk on? When we go into the US bond markets, whether you're going into the 10 years, well, they like to call them the twos and what have you. Well, the twos are for the 2 years and the 10 years are, you know, the TNs. Well, I saw this dispute with Peter Bandit that he referred to the contracts making out as if he had been on the floors, and then a ex-Goldman Sachs trader was coming out and saying, what are you calling it the TUs for? It's the twos, man. So he was like, what the hell are you talking about? But anyway, just park that. So I thought it was really funny. But what we're seeing in terms of the headlines today, guys, is bonds are falling. So that means investors are starting to take money out of the bonds because last week they were rising because you saw what madness unfolded in the marketplace. It appeared that everything was overvalued and that we're going into the depths of hell. The SOFR has been spiking up. Oh my God, what's going on? Sell, sell, sell. The problem that we have with the idea of the statistical data about what's going on with money regarding the US government, the debt and the Federal Reserve and what have you, and the Fed needs to inject liquidity into the marketplace because they've been sapping banks' liquidity because of the high interest rates. If there is still belief in the stock market and the belief in AI, nothing's going to stop anyone from buying. It's been, look, I've realized that there are a lot of theoretical assumptions about the stock market, stock bond ratio, when that is too high, in the sense where if stocks are overvalued relative to the bonds will go up and the stocks will go down. But you've got business deals coming out left, right, and center, which is making investors think for the fundamental what? That is return on investment in the future, because the market prices it in now. So if we're going to get a rate cut, look what the market did on the expectation of a rate cut. It's just been going up. We hadn't had the rate cut, and then the market kept on going up. We got our rate cut, pulled back a bit, but then continued. Why? Because there is an expectation that the market is going to see that money is going to be cheaper in the future. So when we see articles like this suggesting that stocks are rallying, bonds are falling, it's meaning that investors are starting to rotate out of risk-off assets. Well, when I say risk-off, it means like let's just go into assets. But what we're seeing here is investors are starting to say, you know what, we don't want to go in any safe havens anymore. Let's start putting our money to work, because if the US government's going to shut down and it's going to then reopen, then we are going to get our data. And they're already assuming that the marketplace, in the sense of the labor market, is coming, it's starting to contract quite a bit. We're only going to assume that the rates are going to be cut because the Fed needs to make sure that the labor market has what it needs to be stimulated to continue to expand. Remember, the dual mandate is price stability and workforce. That's all they care about in the Federal Reserve. But quite frankly, what they ended up doing was they thought, right, inflation's been too sticky. We can't focus on that anymore because we're getting the same reading. Whereas right now we're focusing on the labor market, which means that any contractions in the labor market, so any negative readings in the labor market, is equally going to be fueling the idea of assets appreciating, because interest rates are going to get cut, right? Cool. Now, with that being said, let's go and have a little gander on what's going on in the marketplace, just to get you all pumped again. Yeah, baby, Mr. Saylor's buying some more Bitcoin. Not that much, to be fair. It's only 487 Bitcoin. And this guy's always buying in the thousands, and now he's like, we'll just pick up 487. Going over into good old Bitcoin price action, just to break it all down for you guys. 106,000. Not bad, not bad. Now, just before we get into price action, so stick around if you are interested in understanding my point of view on where we are expecting Bitcoin, because there is a lot going off on X right now about Bitcoin's price. You've got James Wynn adamant that Bitcoin is going to take a slump to the downside. You've got people across that all counter-trending him and what have you, because he gets liquidated left, right, and center, the poor guy and what have you. I saw something that he's going through a divorce and he's got to settle out. He's got like 25 million pounds worth of debt. Well, I mean, there's getting liquidated and then there's divorce. Yeah, I don't know which one is going to be worse. I mean, I'll take liquidation all day. Anyways, with that being said, guys, going into the calendar just to break it all down for you. So today we don't have anything to be concerned about in terms of data. However, I'm going over into... I think we need to talk about something. Oh, no. No, I don't want to pay for that. Okay, then. So let me just read this title out for you, just to put into perspective. It says here, Bank of Japan's summary of opinions indicates growing consensus for rate rise. Ladies and gentlemen, that's going to be a bit of a problem, but we'll speak about that in a second. So nothing's happening in the calendar per se. Now, going over into Trump's schedule, he's not that he's scheduled for anything, but it says here that he's going to participate in a bilateral meeting with the president of Syria. Okay, so there could be some deals coming into play. And it says that he's going to be participating in a swearing-in ceremony for the ambassador to the Republic of India. Now, I don't think he's going to be mentioning too much about trade, but he might actually say something about trade in this bilateral meeting with the president of Syria. Again, just be careful when this guy is speaking. That's going to be at 11 a.m. Eastern Standard. Other than that, there's no real news to come out unless there is a discussion about an opening of the US government. The markets will explode. They will. If they agree to reopen the US government, it means we're going to get data. Everyone's going to go back to work in terms of civil service for the Federal Reserve, for the US government. But everything's going to start getting back into business. That will be welcomed by the marketplace, because then we can start trading the idea that we are going to be anticipating interest rate increases, decreases, rate cuts, whatever. Okay, at least we know we're going to be going back into the data. And this week, it says here that we should be getting the core CPI data. Now, they are giving out readings suggesting that it's going to come in lower on the CPI month on month, but the core price itself is going to come in a little bit higher at 0.3%. Now, we haven't got a projection on what we expect for the year on year, but they're saying the last reading was 3.0%. But if we do get any projections that suggest that they anticipate inflation is going to be higher, the Federal Reserve will not really be able to do much about it because they're focusing on the data for the labor market. You know, you can't keep moving the goalposts. They're sustaining the idea that inflation is going to be a bit of an issue, but their focus point is the labor market. And with all these big tech companies looking to offload and start get rid of the employment market, the labor markets that they've got, they're going to offload. Shit. They are going to unemploy a lot of people. We're going to do loads of layoffs, and that's going to naturally encourage the unemployment claims to come in a little bit higher, which the Fed needs to see that happening because then it will be justified in cutting the rates. Now, going into what's going on in cryptocurrency, ladies and gentlemen, just to break down where we at with the ETF, we understand that when there is the ETF activity, that's where we can get a little bit concerned about things. It's been a little bit crazy. The outflows 2 hours ago showed that we've seen quite a bit of Bitcoin coming out. So that's not really great. It's going into Coinbase Prime Deposit. What you've got to be careful of is when you see this, you can't automatically assume that prices are going to go down straight away. No, Coinbase Prime Deposit, their goal is, in essence, they're going to release that Bitcoin back to the marketplace, okay? But it's an order from the BlackRock ETF per se. So they're going to want to make sure that they get the best possible fill. So we don't know exactly when Coinbase is going to sell it, but the usual practice is when prices are rallying, that's the ideal scenario for them to sell Bitcoin. When you hear about guys offloading Bitcoin, so for example, look at this. You've got a big transaction alert. It says here that, let's just give you this one. 247 Bitcoin was transferred from an unknown wallet to Binance wallet. Okay. Well, just think about it. Before it was transferred from Binance to the unknown wallet, we make the assumption that it was, because it could have come from somewhere else. We make the assumption and say, hold on a second. If he's now withdrawing from an unknown wallet into Binance, why would he be doing that as price is rising? Surely when prices rising, you're holding, yeah? No. When you start to see activity on wallets where you see them actually depositing into exchanges as price is rising, conventional wisdom says that when it's rising, hold on, because we're going to the moon. When you've got participants actually moving Bitcoin into exchanges as price is rising, they're seeking liquidity. That liquidity is going to be coming in off the back of the retail trader who is wanting to buy. So quite frankly, when you look at the chart, you can see that over the weekend, Bitcoin has pumped up. So all the deposits that may have happened beforehand into Binance, into Coinbase, would have then taken advantage of this rally to the upside. That is so critical that you understand that. Because if you're thinking that when you see wallets exchanging Bitcoin into exchanges, right, and prices going up, and you're thinking, hold on a second, why would they be wanting to sell? Isn't it all about holding on to the Bitcoin as prices appreciating? No, they're taking advantage of retail demand coming in and they want to sell into it. You pay close attention to the guys that deposit the Bitcoin from exchanges into unknown wallets when prices are dropping. That's good news, okay? Because when you see them do that, it means, yeah, we are favoring higher prices in the future, okay? So we're going to retain our Bitcoin. It might sound counterintuitive, but you've got to really understand that that is what's going on right now, okay? Are we cool with that? Is Tino raising the prices of the ETF to spot swap bots? Maybe. Tino, is there a way to get a push notification whether in the gold member section we're going to be changing that up? I think you should be getting, if you were a gold member, then you'd be part of a Telegram, but we're going to be changing that very, very soon. Tantino, Japan looks like they may raise rates in December. Thoughts? Is this possible? Most definitely. Listen, if you're a holder of Bitcoin and you understand that Bitcoin is subject to what goes off in the stock market, then you must be paying attention to what's going on macroeconomically around nations who are in a position to increase, decrease interest rates. I will say this again, scrap anything to do. I mean, not scrap it, but if you really want to understand when the best time is to invest, you don't look at stocks that are performing. You don't look at your on-chain analytics. You don't look at anything else. You look at the foundation of what it is right now, costing-wise, to do business. If you understand what it costs now to do business, then you can put yourself in a position to be like, okay, then cool, I'll start buying this or I'll start selling this. You've got to look at it from the bigger view. Right now, what's the current rate in the United States? It's 4.25%. Just to make sure that we are correct with that. Current rate right now, sorry, it's 4%, forgive me. It says here 4%. In the UK, it's 4%. Aussie, 3.6, 2.5 on the Kiwi. On the Canadian dollar, it's 2.25. Euros, 2.1. And the yen is just coming in less than 0.5%. Why is it important that you understand that before you even start looking at anything else? Because you want to know what the cost of doing business is. Why would a bank then be saying, okay, let's take this amount of money from Mr. Government at this certain rate, happy days. We'll then put a markup on top of that, and then we'll open our doors for business and say to all commercial businesses and domestic users and what have you, here is what you will pay when it comes to borrowing money. Now, if the rates are high, you're not going to be anticipating that much activity. So then you could say to yourself, all right, then as an investor, what I'm going to do is if the interest rates are still high, then I'm going to start looking at putting my capital into, for example, medical biochemistry, whatever, any medical sector stocks, and of course, aerospace and defense stocks. Okay. Now, what you've got to be mindful of is this. If the rates are still high for a long period of time, then that means you're going to be generating yield. So then that means that you might want to put yourself into a position of buying bonds before you buy stocks, because you're generating a higher rate of return by holding onto the US debt, okay? Because they're paying higher rates of interest. So you're going to be earning off there. But once you then start seeing interest rates being reduced, that's when you start looking for stocks. That's when you start looking for riskier assets. Why? Because it's flipped. Think about it. The cost of doing business is now going to be coming down. So that means that any assets that are overvalued right now, they will start to pull back on investors consolidating previous positions. Everything will then retrace, and then they will position themselves to start accumulating capital, go out and borrow it, and then they'll start plowing back into it. Why? Because the rates are being cut. So again, unless you're focusing on interest rates, then there's no point in looking elsewhere about what's going to move, because you've got to understand big players will be buying those stocks. And if they don't have the capital that they've borrowed to put that money to work, because it's cheap to put it to work, then why would you be wasting your time looking at anything else other than interest rates? When you understand what the cost of doing business is from the get-go, you're then going to be appreciating what's going to be moving on the back of that. So going into it, Bitcoin. Is Bitcoin a risk-on asset? Yeah. Well, if the dollar's going down, then that means investors are seeking assets that are appreciating against the US dollar. That's good news. Why? Because that means there's an expectation that the rates of return on the dollar are going to be lower. Okay, so we got to pay attention to Bitcoin because we know interest rates are going to get cut. So we can anticipate that on any retraces that Bitcoin takes, we can use that as opportunities to start buying up. Because we're going into an easing cycle, money fundamentally will be cheaper in the future. But this is the thing. If Bitcoin decides to go slump to the downside, okay, then you have to be in acceptance that you have to be able to absorb that, because that's going to then encourage investors to then, from the time it takes for it to go down, they're going to be going out seeking liquidity. In other words, borrowing money. The interest rates hypothetically will get cut down to 3.75%. And then that means money is going to be cheaper. So it's going to then encourage a wave of new people coming in and saying, I want to borrow at these rates. And then Bitcoin in that meantime takes a nosedive to the downside and then starts to climb back up again. Okay. When you understand that cycle, then you can be like, okay, in the longer term, I'm going to come out on top because money's going to be cheaper. Investors are going to then rotate out of whatever they've been earning money off right now. And then they're going to start going into other assets because they're going to be able to borrow money cheaply. Okay. So that is something you got to take into consideration. Man, Nasdaq is doing some wild things. Okay. Does that make sense, guys? Are we cool with that logic? Now, quickly just going over and looking at everything else. So Euro is coming away from these lows off the back of the strength of the dollar coming away a little bit. And because the idea of the dollar is pulling back, it means that, I mean, with this story about Bank of Japan, if they do increase their interest rates in December, it's going to be, in my opinion, a massive shock to the marketplace. It really is, because it's the only time that the market can really get to move in terms of volatility. Because when the interest rates of the Japanese yen increase, all the carry traders that have been borrowing yen at the rates of 0.5%, they're going to be charged a higher rate of return to pay the Bank of Japan back. Because if they're going to increase it, they're going to increase it to 0.75%. So the guys that have borrowed rates on the yen at 0.5%, they're going to pay a 25-point markup, and that's going to cost them a lot of money if they've been borrowing yen in the millions. So what do? They go and borrow the yen at the low rates, sell that yen into dollars, dollars appreciates, then get those dollars and then convert them over into the stock market. So when the Bank of Japan declare that they are indefinitely increasing the interest rates, there's going to have to be a rotation to get the money back into the yen, which effectively means sell your stocks, put it back into dollars, and get the money of dollars back into the yen so that you're not taking that much of a smack across the face when the interest rates of the yen go up. The carry trade is so important for Bitcoin, because if the stock market does pull back aggressively on the back of that, Bitcoin most definitely will pull back on that. Most definitely. Okay. Here we go. You talked about big money selling on a rally to the upside. Do you use the cumulative volume delta indicator to look for divergences between it and the price? The cumulative volume delta, in my opinion, it's a little bit slow, because you could have a cumulative volume delta showing you a progressive move to the upside. It could look something like this, all right? You could have CVD like trailing upwards like so, right? And then you've got price action doing this, right? What happens when price does this and breaks down aggressively? Yeah? The average of the CVD itself will then start to turn, but then price would then be doing this, and then the CVD in principle would then start to roll. But it all depends on the time frame that you are actually basing it off, okay? What you've got to look for, all right? And I did the weekly review on explaining this, if I'm correct. No, I've actually recorded it. I haven't uploaded it just yet. But it was in the last live stream where I spoke about Delta. That's it. What you've got to look for when it comes to Delta is you've got to look for a duration of time where Delta is positive, right? And if volume is coming into play off the back of that, then you can marry up the idea that price is going higher, Delta's coming in positive, buyers are dominating the sellers by net, okay? And you can anticipate that there's going to be an instance where price is more than likely going to roll over. The rollover is when you see the Delta flip on its head and you see an aggressive move away from those highs, okay? So something like this, when you see price making a move to the upside and it's climbing up nicely, happy days, all of a sudden you then witness this sharp drop, okay? Some of you might call it break of structure. Some of you might make reference to it in terms of the vector candles to see price breaking down to the downside, red vector at the highs and what have you. But what's going on inside of that is an offload. Traders are trapped in positions to the upside because they've been buying as price has been rising, right? And then with this negative cut to the downside, when you correlate the delta and it shows a negative reading and volume is present, then you can assume that that could be the start of the delta flip, which means the sellers have just stepped in aggressively, sold into all those buyers, and then they're going to start marking prices lower to the downside until delta then resets and you start seeing a big push of green delta coming into play, which would look something like this, where it drops and then consolidates and then pushes back to the upside. That's effectively what you'd be looking for with delta, ladies and gentlemen. So you can focus on delta divergences. That is something you can do, okay? And that's with price. But what if you focus really on it? Focus on delta and price and volume, okay? Inside of that reading, all right? Because you'll see the delta diverge and you see price trading positive. That's delta divergence, where the delta's negative, but price is closing higher, which means that there were more participants favoring higher prices, even though the delta was negative, all right? If you then see the volume, all right, and it's coming in higher, then you can back the idea that the buyers were really in control, okay? When you start seeing that, you can then say to yourself, all right, then I'm in favor of higher prices, all right? All you've got to look for is the relationships between the dominance on the amount of orders that are coming in, which is the net of the delta, which is the buyers and the sellers, who's winning in that, the volume, which the volume will just say if the previous candlestick transacted 5,000 contracts and the next candle transacted 7,000 contracts, price trades positive, delta is positive, then you can make the assumption that the next candle is going to then suggest possibly a little bit of a pullback, continuation to the upside, right? Delta is about what develops and what's the impression, what's the idea, which is the same thing as the hybrid system. Price has made a big move to the upside. What are we looking for here? Well, we need to see price starting to show promise of continuing higher. Go to the smaller time frames and say to yourself, okay, then what do we need to see Bitcoin doing at this point? Well, frankly, you are seeing a lot of vectors coming into play where they keep marking up, coming down, marking up, coming down, marking up, coming down. So whatever structure they decide to break first is usually going to be price going in that direction for a little while. However, when you see vectors breaking down, like I just basically explained to you about the delta, we can assume that if you pull up all your exo charts or anything like that, you're probably seeing positive and negative delta. And when you've got this candlestick right here giving you a negative reading, and you could assume that that could be the negative delta as well, pay attention to the volume to just back it and say, okay, if the volume is heavy, delta is negative, price is going down, we can assume that we can expect prices to trade to the downside for a short while, okay? So take that into consideration. I've just gone a little bit of a masterclass, but whatever. Yeah? Are we cool with that? Tino, could you give us some insight about coins such as FET that have had a huge pump last week, how to approach them? Yeah, I know there's been a lot of altcoins that have been making some significant movements, and a lot of people are asking the question, are we in altcoin season? Okay, so we've had a nice little move to the upside on Fetch, for example. Okay, so yeah, a lot of it. I strongly recommend, guys, that the mistake that a lot of people are making with altcoins is, in my opinion, and I might be wrong, okay? But what I'm saying is not testament, it's not gospel, but at least do something about it, because everyone's like, altcoin season, Monday, 88. Then 2 days later, it's down to 46. Altcoin season over. Given the sporadic nature of the marketplace, if you've got an altcoin that's made a big move, take the money, man. Get out of it. Go somewhere else. Because you'd be saying, hold on, why is it pumped? Now it's just pulled straight back. Right now it's come up again, but it's more than likely going to pull back. Investors, I believe, in crypto have got sick and tired of relying on the idea of altcoin season, Bitcoin season, and what have you. And they're just like, forget it. I'm just going to get my money, take some profit, go to the next coin. Because if coins are just going to pump and then dump, and it's clear as day that priority is Bitcoin, Ethereum, Solana, BNB, and that nut job XRP, okay, then I'm only going to just park myself over there. I mean, we've got Zek and what have you. That's going crazy. There's a lot of hype behind that. But of course, if we just go over to Zek itself, you can see Zek, where we are. Hold on, come on. Nasdaq, you amazing person. Happy days. Yeah, look at this. Look at this, man. This is an altcoin. All right, this is embarrassing for XRP. This is embarrassing for Ethereum. Look at it. That is disgusting. I begrudge buying XRP, man. It pisses me off so much. Look at that. Look, when that was 50 cents. When was this 50 cents? When was this ever 50 cents? Please, was this ever 50 cents? It was never 50 cents. Was it ever 50 cents? I hope it has never been 50 cents. I'll be satisfied. Then let's go to the 3-month chart. Oh, okay. I'm cool with that. I'm cool with that. I'm happy. Because I'd be so depressed if this, right, was cheaper than XRP. I'll take it back about X. No, I don't. It's an absolute dog shit coin. Anyway, So yeah, that's my point to you about the altcoins and what have you. Best way for you to understand where you are with altcoins, go to the totals chart, have a look at where you are relative to it. So the issue that we've got is we've got this consolidation happening on the altcoins, right? Excluding Bitcoin, Ethereum, and we have got this wick. Yeah, do I believe it's going to go down there? I do. All right, which is why you're seeing quite treacherous behavior with the altcoins. Ultimately, if everything starts to pump and Bitcoin's going up, Ethereum's going up, Solana's going up, altcoins will take claim to it. But I do believe that the only reason why altcoins will be going up is because people will have this sense of a reviving of belief about altcoins. Now, some of you will be like, man, this guy doesn't know about the altcoins. We're in it for the technology, man. We look at what's going on with, this and that. All right, if you're in it for the tech, okay. So why is Google investing in cryptocurrency-based stocks, cipher mining? All right. Did you guys know that the quantum computer story has netted a 1,900% gain overall? I am going to take claim that I gave you guys the heads up on that. I hope you ripped it apart with it. But quantum computing is not done. The next thing that's going to fuel AI is data centers and nuclear energy. Okay. So you might want to go and check out certain companies. I'm going to give it to you now, but there is one company in particular. This is a New Scale Powers, one of the guys in the Discord. He asked me a question on this company, okay? And I gave him a breakdown on what I expect with it. This is a company that develops small nuclear modular reactor technology. The US has 0 reactors in the future that are going to be constructed, okay? That's a problem, all right? Because if they are trying to push data centers, those data centers require a lot of power. You're only going to get that power from nuclear energy, okay? Now, once the US starts to get into that frame of mind of let's focus on the nuclear energy, even though he's trying to denuclearize everyone else, it's going to be it's going to be a real challenge, all right? And companies like this are going to benefit from it because data centers demand power. And in order for them to run efficiently and help the process of data be achieved, nuclear power has to be consumed. And companies like this are going to see the benefit from it. Right now, it's trading horribly. It's only $30, does some decent amount of shares, but earnings per share is not there, okay? But this is exactly like quantum computing, all right? So I'm giving you the heads up. This here is going to be something that evolves. We know there's financial commitment when it comes to data centers. We're now going to be looking for alternative sources of energy to service them, okay? Just keep an eye out on the sector of nuclear energy. Stocks like this, they're going to do something, all right? And we've got proof that they will because of the investment in data centers. Like I said, the US has nearly 0 reactors. China has 43. So you can appreciate who's really dominating. Yeah? Cool. Going into where's Nasdaq? Nasdaq, you wonderful child. Where are you at? Look, man, this is what I'm saying to you about sentiment, ladies and gentlemen. Look, this is sentiment. There's no news come out, guys. Do you understand that? There's no news whatsoever. Okay? None whatsoever. Right? But yes, there is. What's the news? The US government is going to come back to business. The market prices it in now. That's what you've got to understand. If we find out today that they are going to open the government, your market is going to explode. It is. It will be short-term volatility because they'll be going in the idea that we're going to get data about the labor market. Now we're on track for rate cuts. Now money's going to get cheaper. Okay? We've had this stalling. And I would say that it's done very well. Now we're going back into business. So please, ladies and gentlemen, take that into consideration. We've had some very interesting movement right now. I'm in longs on Nasdaq right now, and I'm gonna end up closing this trade. But we're currently in. Yeah, I don't usually do this, but I usually end up keeping risk off in the market. Right now, we're in about a $2,100 gain on Nasdaq. and I sat through the open, and I just tried my best to not pay attention to it. But I am going to look to try and get rid of it because Nasdaq can easily come back down because Nasdaq is a nut job. But you can appreciate here that this is doing very, very well to the upside. I'm going to add to this trade. You're not going to probably see too much of it, but it is moving quite high. I'm going to be very careful with it. I'm going to open 4 contracts. Yeah, so I've opened 4 contracts to add to it as well. It's moved my entry, but yeah, I'm not too concerned about that. But I've got to be careful, okay? Even though I've just added to the trade, if I don't see the momentum coming in and continuing, because we are at value area high, look, we're at the highest point of the day. We're going into a red vector candle recovery. So I've just got to be very cautious with this, all right, and not take too much of a risk. It can easily snap down, all right? So when it comes to scaling into a position, especially with Nasdaq, you either have to put the size at the start or you start light and then give it a significant range to be able to move up from and then add to the position. Because if you factor in a retrace at the 50% range of that, then there's going to be a bit of an issue for me, all right? So I'm going to be paying attention to this and making sure that I'm not leaving money on the table. But as long as it stays at the highs and they start building a profile here, then I'll be trading back into the red vector candle recovery. Logic says it should go all the way up towards that range, which is effectively, yeah, it should be 25,791. It should go up there, okay? And if it goes up to that point, happy day, we've made a nice little return today, okay? So, yeah, keep an eye out. Look, this is trading at value area high. Look, it's going. It's going. So we've got lots of activity. Market is fully open, and we've got 42 contracts at the top side. So when I see offers coming into play at the top right there, that's when I get a little bit optimistic about things because it tells, look, see how the order book just goes empty right there. Look at that. Nothing. So we need to start seeing more participants saying, yeah, I want to buy. There you go. 229 at the top. So that keeps me compelled to stay in the market. There's participants. It's not a spoof. They have to eat that order, and that should bring some more momentum to the upside. Go on. Don't pull it. Don't pull it. Go on. I hate, no, it's back in. It's back in. That's good. And it's adding. There you go. Clear it. They just cleared it. There you go. Happy days. That's what you want to see. That's exactly what you want to see. You want to see that because it actually did it actually clip it? Come on. Keep going. There you go. Keep going. At 233 again. Yeah, they want business. They want business today. Come on. 157. Just zoom into the chart if you can't see it. There you go. So they're eating that liquidity now. We are trading at the value area highs. This is a problem, okay? Because this is where they can instantly reverse. So you don't trade this in the sense where you don't trade the idea of price going up. Unless you're going for small ticks, then of course you trade the S&P because this movement with Nasdaq, it bounces up and down really aggressively. So you've got to be very careful with that, okay? Cool. Yeah, I'm going to have to manage that. Any deal made for New York, new government reopen? Not just yet. Here we go. Fed Muslims come in and said that I'm very much looking forward to seeing official data. Hold on. I feel like we have a pretty good sense of where the economy is and the labor market is around full employment and has been cooling. So as long as it's been cooling, then it grants the idea of interest rates being cut. All right. So I just got to be careful with this Muslim speaking because they can say something and then it just rocks the marketplace. Any questions, guys, before we call it a day? The cryptos aren't following this. This is what I mean. This is how you know there's a disconnect. All right. So let me just explain. This is what's frustrating about it. Nasdaq is going up. Right. And this is why I strongly urge you, okay, to be putting yourself in a position to be trading other assets. All right. If you know about BTCC, the link is in the description. You can trade Nasdaq, Bitcoin, cryptocurrency, and Forex on that platform. Just go and check it out. It's in the description of this video, of this live stream. But you get the option to trade the Nasdaq, the S&P, the Dow Jones, the Euro, and crypto. If you're in longs on Bitcoin, and your Bitcoin is negative now, just go over to Nasdaq because you're guaranteed to get volatility. Bitcoin doesn't always move fast. Look at it. It's pulling back now. But Nasdaq, well, if it starts to pull back, then okay, we will know that Bitcoin's leading the move. But if Nasdaq keeps going higher and Bitcoin's just doing nothing, then if the overall picture is that risk is back on, They've done the retrace on Bitcoin to buy it on the cheap to then send it back up. Is the red vector candle giving us a clue for that? Possibly. All right. So we just got to make sure that Nasdaq just keeps on moving up. All right. Cool. We're getting rid of that very shortly. That is very true, Priest. That is very true. It's actually cheaper to borrow more if the interest rate is 3.75. After COVID, we're near zero rate. If we compare, it will not be cheap now to borrow. Of course it won't. Of course it won't. But you've got to understand the economy has expanded with high interest rates, which means there is resilience. It means that there is so much money that is being stored and not being put to work. All right. Now we're starting to witness it getting put to work. Why? Because all these deals are coming out and these cash-rich tech companies are absolutely ripping it apart. Yeah, look at the NQ chart, but take trade on the ES. Lifesaver to my account. Most definitely. It's most definitely a lifesaver. Are you, Tino, you wearing trousers? Irrelevant. Are your 3 stocks you'd buy today? What are your 3 stocks you would buy today? Quite frankly, the 3 stocks that I would be buying today, okay? I mean, look, let's just go and have a look at Circle. Circle is just starting to move up a little bit. It's holding at this 106, 107 region itself, but slow burner. Very, very much a slow burner. QBTS, quantum computing, that's all I'm focusing on. This is a nice little pullback, and it's done on light volume. It tells me that they are going to do okay. If you just go into the quarterly earnings, look at that. Look at the quarterly earnings. You hear me saying it all the time. It needs to be accelerating. It needs to be stellar. QBTS is coming with 50% on earnings and 100% on sales. That is awesome. Last quarter was 20% earnings, 42% on sales. Fantastic. So there's acceleration. And you can see that there was a little bit of deceleration, but they obviously had a big purchase here, a big activity going into March, which is when we were talking about quantum. But you can appreciate that it is good fundamentals. So as long as the volume is trading lower and when it's negative, and if it's positive, it's trading higher, then we can assume that we're going to start seeing some breakout behavior on QBTS. Quantum computing and nuclear energy, in my opinion, is going to be another impact in the marketplace. That's going to it's just going to go. It is, because that's where activity, that's where investment is going. Okay, cool. Yes, the earnings are on Wednesday. Circle's earnings are on Wednesday. And that, for me, is going to be a big thing. You know, Circle's earnings on Wednesday before the open. So if they do actually come through, you're going to see Circle pump. Don't buy it just yet, just in case. All right, just be careful. But if the earnings come out and it's good, then it'll be a good opportunity for you to pick some up. Okay. All right, I need to get out of this Nasdaq trade. Okay, happy days. Cool. When it's safe to be, will it safe to say that Tino's not worried about trading today? Oh, we're always worried about trading. Cool. 3 buys of the day. I'll probably do that tonight for you. Yeah, I'll do that for you tonight. I'll do a video for you all on that basis. Okay, cool. Anyways, with that being said, mad love and respect. Wait, yep. Stay safe and happy birthday to anyone's birthday today. And I will be tuning into you all later on. Hit the like.